Good morning and happy Friday. Jordan Keck here, your complicated deal guy with your weekly market update. Kicking off, interest rates moving slightly lower, just from 6.44 to 6.42% week over week. We did see quite a bit of volatility, which is really just the normal these days here. And everything is centering on the peace talks and negotiations in Iran. So before we get into that though, I wanted to talk real quick about our mortgage tip for the week. It's about using 401k loans as down payment. Now, some people may not know this, but 401ks are often going to have a very interesting tool you can use for it, which is to take a loan against the account. This is not something that regular IRAs will have outside of a 401k. So if you wanted to pull money from an IRA, you'd have to do that as a withdrawal. You may have a tax or penalty implication on that as well. With a 401k, the general guideline is that you can usually take a loan for up to half of whatever your balance is, or $50,000, whichever is less. Now that money goes back to yourself, back into your account, and we don't have to account for those monthly payments in the mortgage qualification. So great option for somebody who's okay with a little bit higher monthly payments for the cash flow, but really just borrowing money from themselves, not have to incur any taxes or penalties on that. Obviously, I'm not a financial advisor, I'm not an accountant here, so double check the plan details, but that is a great option for down payment funds if you or your client do have a 401k and have the ability to take a loan from that. Next, as far as the US and Iran situation, US this week began Operation Economic Fury against Iran, which includes tracking and freezing offshore accounts and the continued blockade of the strait, ideally forcing Iran to run out of storage space for their oil, to slow or even halt production, and really hurt them economically. By Wednesday, the US had backed off on the operation, proposing a one-page peace deal, 14 points, mainly including the delay of Iran's uranium enrichment program or their nuclear program, which we are still awaiting a response on. Next, we had Realtor.com reported active listings up 6% for the month of April, which is normal to see that build up in springtime. We're also up about 4.5% year over year. Average days on market has fallen from 57 to 52, which is just a little bit higher than we were at the same time last year at 50 days for the average days on market. Cotality reported home values rose 0.4% in March after a 0.5% increase in February, because of back-to-back months of increases here, and they're forecasting a 5.1% appreciation in the coming 12 months. This is an increase from the previous estimate they had of 4.7, showing that they believe that there is continued optimism in the market, and we're going to see more home price improvement than expected. Next, the Census Bureau released February's and March new home sales data after the delay from the government shutdowns, both of these coming in above estimates. February was up 9% for the month for new home sales, while March was up 7.4%, showing a combined 17% increase since the month of January. While the median home price did fall, the average cost per square foot remained stable, showing that builders are not necessarily lowering prices, but are building cheaper homes, so the mix of prices above and below 400 or 500,000 is shifting or skewing towards the lower end of that. Next, ADP's employment report for April showed 109,000 jobs created, which was almost double the estimates, but it's still within a range of 84 to 120,000. So small businesses added 65,000 jobs and were the strongest area of growth, but ADP said the majority were part-time and lower paying. 56% of jobs came from education and health services, which aren't as volatile in the market, and it's been the biggest source of job growth over the last year by a wide margin, in part showing that that may be due to more of an aging population. We also got the BLS jobs report for April coming in, showing 115,000 jobs created, also about double the estimates of 62,000, but the BLS has been very sporadic and lost a lot of credibility because of the huge amount of revisions we've been seeing. This was no exception to that, as we saw February was revised lower from a negative 91,000 to 91,000 job losses to 156,000 job losses, and March was revised 7,000 higher to 185,000. Market didn't really change a whole lot because of this, in part because they know the BLS really can't be trusted for their initial numbers, and two, the biggest focus is on Iran and their response to a potential peace treaty. Once that happens, we'll update you. We'll see you next week. Have a great one.